This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have
breaking news. What is up, everybody? Happy Friday. You know what that means. It is Friday Junior. Or wait, Thursday. It's Thursday. Sorry, I was going to say happy Thursday, happy Friday Junior, or Friday Eve, whatever you want to say. But it's Thursday. Definitely has that, approaching long weekend feel, lower volume in the markets. We'll check out what's going on in the SPY and the Qs today. But definitely anticipating some lower volume today and tomorrow as we head into the long weekend. Pretty much everything down again today. Energy, again, getting absolutely crushed. The XLE is down 2.42%. So if you were buying the strength in energy the other day, well, you've basically given up all those gains in the past 2 days. Energy up your best performing sector on Tuesday, your worst performing sector yesterday and today. Let me go ahead and get my Benzinga Pro shared. Shelly, I don't know. My hair was not messy, but then I put the headset on and it made it messy. Let me fix this real quick. A little better. With you from Fort Worth. Shout out. Shout out from Texas. Where else is everyone from? Is this where the Chippendale dancers are? No, Jessica Meacham. But yeah, S&P 500. Whoa. I thought, all right. So energy, this is the XLE down 2.3% today. The SPY down a little bit less than 1%. The Qs down nearly 2%. Tech showing a lot of weakness today. Let's go here on the daily chart. NASDAQ finishing potentially in the red for 5 days in a row for the first time since February. You have to go back to here to find the last time we had 5 red days in a row on the Qs on the NASDAQ. So I don't know. I mean, it certainly, I didn't think we were going to come back and test those lows. Now it looks like we are. And I think you got to be able to adapt. You got to be able to look at that. I'm not, short right now or net short or anything like that. I'm still adding to my long positions as we go, as I've been doing. But right now, it seems like a classic don't fight the Fed. And I mean, we might see the market get back down to where it was before we see any sort of bounce or anything like that. Chip capital of USA, sunny Arizona. Hell yeah. Florida. All right, we got Texas, Florida, Arizona. We got a lot of warm, nice places. A lot of places that I'd like to be playing golf right now. All right, guys, let's go. I'll give you a quick rundown for the show today. As always, if you've got any stocks or any trades you want to check out, drop them in the chat. Always looking for more trade ideas. We're going to have Steve Kalayjian on here in a few minutes from Trade Easy, talking to Steve about what he's been watching, what he's seen in the market. So excited to get Steve on. And then after that, we'll get Hot Stocks Luke on at about noon. And then after that, Rob Roy, 12:30. So we've got a packed show today. Different traders. The trade ideas are going to be flying. Make sure they're flying in the chat as well. Smash the like. Subscribe to the channel if you have not already. Lord Byron from Philly. Who do the Eagles play week 1? I think it's the Lions. I think y'all are in town week 1 in Detroit against the Lions. I've had 3 fantasy drafts the past 2 nights, guys. It's too much. I've been overwhelmed. Last night I was doing like 2 at the same time. One with work friends, one with college. So if we have time, if we have like 10 minutes later in the show where we're not talking about stocks, maybe I'll go through the fantasy teams and let y'all grade them, see what you think. But yeah, guys, I mean, so here's the thing with the overall market. I'll give my thoughts, and again, these are just thoughts, opinions. It's certainly not financial advice. It does seem like that environment where you just don't want to fight the Fed, right? The Fed came out reaffirmed in Jackson Hole that, hey, we're still, hawkish. We want to see, inflation come down substantially before we even think about pivoting. And then you had, I forget the gentleman's name from the Fed. He was on the Bloomberg interview with Joe Wiesenthal, said basically, and Tracy Alloway on Odd Lot said basically, we were happy to see the market react that way to Jackson Hole, which I think gave a lot of people on Wall Street clues that the Fed wants to see the market come down even further from here. I mean, again, I don't fight the Fed, but I think if we see, the market continuing to come down, inflation continuing to come down, layoffs increasing, like all these things, that the Fed might not have any other choice, but then to at least start talking about, if not pivoting, saying, okay, we're going to be completely data dependent. That's what I would hope for here, is if they go, all right, they're going to go 75 basis points the next hike. That's kind of what's expected now. It's on the higher end. If they say, okay, we're going to get another, bigger hike, we're not going to go 50 points. We're not going to go soft here. We're going to go 75 or even a full percent. And then said, but from here, we're going to be data dependent. I think the market would respond really well to that. Or maybe not. I don't know. But, the Fed has a lot of different, options here. And I think what they're doing right now is basically just sticking course to what they said they're going to be doing. They're going to continue raising rates until we see inflation really, really come back down. And I don't know what that looks like from them, if they're looking for a year over year, target date of 2% or whatever. But I mean, I don't know about you guys, but I expect the August CPI, which we'll get, I believe, September 13th. So here in about 2 weeks, I expect that to be even better than July's. Again, I don't know. Even if it is, I don't think that means the Fed is going to come out and say, okay, we're done with dealing with inflation. We can, pivot or ease here. I'm not saying that. But if you do have more conviction, okay, now we've had 2 months in a row where at least month over month inflation hasn't risen. This is assuming, of course, the CPI that comes out in a couple weeks is lower than, July's. Then that at least would give, consumers, give investors, give Wall Street at least some confidence that, okay, maybe even if the Fed isn't ready to pivot, we're getting closer to solving the problem that would allow the Fed to kind of take its foot off the gas pedal. But at the end of the day, I mean, So ADW saying they think mega recession. I mean, I'm always, I don't know. I feel like right now, like the biggest thing right now that I think is actually really worrisome, and kind of, I think a lot of things that bears are focused on right now, is the energy situation in Europe. And if you go on Twitter, you read posts and stuff, like it sounds super dire. You see pictures of the bills of different small businesses saying, okay, I'm a coffee shop having to pay, 15 grand US dollars worth for energy this month. Like, we can't sustain this. I would be surprised, and you can see it in some of the, year out price action in some of the energy markets in Germany and in Europe. And we can talk more about that. I'd be surprised if these things actually come to fruition, right? If the UK has to, start closing pubs and stuff to conserve energy. I just don't think all that stuff's going to happen. I feel like you get these stories all the time that the headlines look really scary. And it's like, I don't know. I always remember the ones where it's like, oh, we're heading toward like a chocolate shortage, or like coffee beans are, it's like, and you see these headlines sometimes and they sound really scary, but they never like end up happening. Like, I really highly doubt the UK ends up having to close bars and other businesses. And again, if you look at some of the energy markets, it looks like, the expectation is these prices are going to fall and fall quickly. Again, I'm not saying that's going to happen, not financial advice. But certainly around the world, if you look on what's going on macro, and I don't know, different central banks around the world are going to respond differently to this environment, to the economic environment right now. But that's, I don't know what the percentage is, but that's like worst case scenario, I think, is like a worldwide mega recession, right? I don't know. They have a beer shortage? That's not good. I thought we did begin the quantitative tightening. Vape King saying, so many people are saying the only reason the market hasn't crashed hard is because folks are running to stocks to fight inflation. Is this true? Who knows? But I'm still holding. and I'm 90% stocks. I don't know. I don't think that's would be true because most times, right, inflation usually implies that people have less spending money, right? If gas prices go up and food prices go up, you have less money to spend in other places. So maybe for folks with a lot of savings accounts, but that's not the standard American. The standard American doesn't. Oh, I don't even. Maybe not. I don't know. Doesn't have really a lot of money in savings. So if your income is going down, if you have less money to spend, chances are people are going to be buying less stocks. People are going to be investing less, not more. But I do think. I don't know. I mean, you can talk about all the different inflation hedges you want. I don't think being invested is a bad idea. Not financial advice. All right, Shelly. Shelly's going to BRB. She needs to chill. Other stocks I've been watching. Oh, I bought some of that on yesterday. Already down like 4% today. I mean, it's a growth stock, so I bought it to hold for years, so I don't really care that it's down 4% today, but maybe I could have timed it a little bit better. Maybe I'll buy some more if it gets down back here and then just completely sell out of the position if it keeps dropping from there. But this is that Swiss shoe company that I've been seeing the shoes more and more and more. They're hot right now. Stock's not hot. Down pretty much straight from got to highs of 24.56 on August 17th, about 2 weeks ago. Since then have dropped more than 25%. So on getting hammered. Hope no one followed that. Hope no one followed me into that. Stocks don't fight inflation. There is so a lot of economists have this theory that in that basically when there's quantitative easing and more money flowing, that you can actually get like good inflation in certain assets, and that usually comes down to like stock prices inflating, houses inflating, art prices inflating without things like bread and like food inflating. So there is, I think, an environment where that's possible, where you can have stocks, essentially the prices of stocks inflating more than that. In case that's the norm. You know, if you look throughout history in the United States, the S&P 500, the price of it has inflated, has gone up more than inflation has. It has outtracked inflation. But when you start seeing inflation that we've seen over the last year, obviously you can see the impact it has on the market, right? Let's look at the S&P 500 after we've seen the CPI, you know, really since about last, I believe, I don't know when we first got the really first high CPI print. It might have been March. No, it was way longer ago than that. It was like back here. We first got our first high CPI print.
So that's why I reached out to Chris. First time he's not giving it out, and the second time I think that he's on it.
Yeah, I mean that's basically it right now. Where everyone's just kind of dependent on what's the Fed gonna do. I think a lot of people are in that boat where they're like, hey, you know what? I'm not going to fight the Fed right here. I don't know. I mean, it seems like, well, and we'll see, because I do, you know, Jerome Powell did say the Fed is going to be data dependent. It just is, it's hard to believe that they'd be willing to facilitate, not even just withstand, but really facilitate like a full on recession here as inflation's falling. And again, I mean, I know that's probably the unpopular opinion. Most people disagree with me. Most people probably say, no, we do want unemployment to come up, you know, and inflation down. But I don't know. We'll see. Stacks asking, what about REITs? REITs, I mean, I don't know. The REITs, like, so the thing about REITs, they pay a good dividend. But they don't, I don't think, like, historically a lot go up. What is Vinci's one that I actually like? Oh, man, Vinci's been doing well. Should have been on this. Holy cow. It's pulled back, too, from 35. Let's go, let's see. Dividend yield, yeah, 4.4%. All right, guys, it is 11:46. Let's go ahead and get our first guest on of the day, Mr. Steve Kalayjian, joining us from Trade Easy. I'll go ahead and get that link in the chat. Steve, of course, with one of the best setups of anyone we bring on the show. Got so many screens behind him. Let's go ahead and give Steve our special intro and get him on Benzinga Live. Steve, how you doing today?
Hey, good morning, everybody. Hey, Adam. Aaron, how are you?
Good, good. Well, let's start with what have you been watching today?
Oh, well, pretty much the S&Ps on, we had some really good sell divergences right after the opening. Apple, Roku, Square, Tesla, and Amazon. We had really good sell divergences right after the opening. Got that push up and just absolutely just crushed them to new lows. And then, so we got a bounce off the 3903 and a half. We had some really great trades on the S&P here. We had a correlation strategy that kicked in around 1030. They dropped from 31 all the way down to like 03 and a half, 04 on the S&Ps. NASDAQ dropped about 100. So it just seems like, we're just, as I mentioned last time I was on, we're just constantly making lower highs here. And, when you had that big push up a couple weeks ago to the 43.27 on the S&P, it was all because of what the CPI number came down 0.2 of 0.2 from 8.7 to 8.5. People were excited that maybe inflation was, coming down. And then what fueled that monster rally was obviously short covering. Monster short covering just propelled it. And we made a lower high. We had the big shorts up there, and we dropped 400 points on the S&P. And I told you there were 4 gaps below the market. The real question that we're going to have here is, I think we're going to get a bounce, a pretty sharp bounce the next one to 5 days. Again, it's going to be a lower high. I think they crush them in October to maybe a double bottom to that 3642 level. I don't know if we're going to make new lows. I think the Dow will be below 30,000 that time again. And then I think you get the big rally going into the end of the year, a lot of short covering rally, and hoping that the Federal Reserve, based upon the October statement, they made to say that they're pretty much done for a while.
Yeah, and I mean, I think right here, like you said, a little bear market rally, or whatever kind of rally you want to call it, short cover rally, whatever, can be anticipated at some point in the next few days, because we're looking at, I know maybe not the S&P, but on the S&Ps. So we're looking at almost 5 days in a row on red here. Mm-hmm. Eventually we got to get a little bounce.
Yeah, but remember, even if we get these bounces, look at the 2 gaps below the market here. You got some really good gaps. I think those gaps get filled in October.
Yeah. So you don't think on this move down we're going to come back and retest the lows, but you think maybe on the subsequent, on the next move down we will?
Yeah, I think you get a bounce to a lower high. If you draw your trend line all the way across on these 3 tops, you're going to keep making lower highs.
Got it. So here, I'll pull up the Apple chart. You mentioned some sell divergence there off the open. Anything interesting here? I'll go to a 10-minute chart here. You're seeing on Apple's chart.
Well, we had shorts above an Apple above the 172, 173 level. We were like, 19 points from my moving average on the daily. And I just think Apple is going to just follow the market, continue to make lower highs, and eventually, I don't know if we're going to make that new low. I think the low is 129 or something like that, but it's going to get close. And then I would probably look to buy Apple. I think they're going to have strong earnings. I think the iPhone 14 is going to come out really strong. So, obviously they have a ton of cash. I think that the 2 stocks that I would buy if we do make a double bottom, the ones I like are the 3 would be Goldman Sachs, Boeing holding above that 117, and Apple holding above the 129 level.
Man, Bowen getting crushed today, down 5.5%. Do we have news on Bowen? Let's see.
No, I don't see any news, but that 117 level is look at that. I think it's gonna, if it gets down to the 117, 120, I think you gotta own it. And that is if we drop another 300 points on the S&P. I don't know if it's gonna get down that low.
Yeah. I don't know. Yeah, I think like I just feel like to get back down to, and I'll go back to the S&P, to get back down to these lows we were at in June, something would have to like get materially worse, whether it's here domestically or around the world, than what we saw mid-June. And mid-June, we hadn't gotten the decent CPI report from June yet. You know, things were looking pretty dire then in Europe in the energy markets, and they still are today. But you know, like I'm curious, what do you think? Do you think we need a big bearish negative catalyst to come back and test these lows?
Yeah, I mean, you know, it depends also on the statements that they're going to come out and say. I think that if the market's worth those levels, they probably be careful. I think, you know, the thing that everybody's talking about that I hear on my end is that Europe's going to go into recession based upon energy prices that are going to be staggering going into the winter, natural gas, electricity. Some people I have in my live channel are telling me it's going to be north of 20% inflation in Europe. So I think that's going to put on a lot of people from spending and putting Europe into a recession.
Yeah, I do see, you know, I saw today we actually got lower than expected jobless claims, indicating the market, the labor market is still hot, you know, that a bunch of layoffs and whatnot haven't really started yet. And I guess that's bad news because that means the Fed, you know, has more reason to keep raising rates.
Yeah, well, Shopify just announced, I just think it's going to come in droves, though. Shopify announced they're going to lay off 20% a couple of days ago. I think it's going to start really hitting the market soon in the next 3 months.
Yeah.
It's scary because, you know, it's people's jobs and their lives and their livelihoods.
Yeah, and that's why I don't like when people, you know, are out there saying, "Oh yeah, we need the Fed to keep hiking to where they're, you know, we get layoffs and there needs to be pain in the labor market before we, you know, fight inflation." And it's like, I get it, right? We need to fight inflation, and I don't like paying $4 for a gallon of gas or more at the grocery store as much as anyone else. But if it comes down to someone getting laid off or having to pay, you know, 3% or 5% more at the grocery store, they'd probably prefer the latter.
Yeah, but the Federal Reserve really botched this up, though. I mean, and I told you this the last couple of times. Their mandate is to monitor inflation. And whenever they went over it, they always maintained, inflation 2%, 2%, 2%. That's their guideline. Well, when in their numbers were indicating that inflation was 2.5, 3, 3.5, 4, 4.5, 5, 6, they did nothing. They actually did nothing until they got to 8.5, 9%. They could have raised a quarter here. They could have did it gradually. You know, they could have did it, you know, because when you were at rates, I mean, I kept on telling people, look, I mean, I've been in the game for close to 40 years now, right? I'm on my 40th year. I remember when the Dow was at 10,000, Fed funds were 4.5, 4.75. Now you're at a Dow at 35, 37,000, and you had rates near 0 to 0.25%. They completely botched this up, completely. And for whatever reason, I have no idea what they were thinking. When you start seeing people, you know, with lumber, milk, 18, 19% higher, lumber, 30, 40% higher. I mean, gasoline, you know, what does it take to be a rocket scientist to walk around in the everyday world and see prices are staggering if you're part of the Federal Reserve? So they completely missed the boat here. I think they completely hurt the markets. They're going to destroy the economy here because now they're going to have to step up to the plate and say, oh, we want to defend against inflation. Well, you could have defended it properly if you did it gradually over the last 5 months.
Yeah, I think, you know, going back to, like you mentioned, lumber prices and back in the early, you know, days of when we started talking about inflation, there really were certain categories pushing that inflation higher. You know, of course, everyone doing home remodeling and building new homes during COVID put a lot of pressure on the lumber market. And then cars was another big one, right? Used cars went crazy. I had to get a new car during COVID, and I was looking at like 2010 Toyota Camrys, you know, 12-year-old Toyota Camrys, and people were asking like 15, 20 grand for them. I was like, there's no chance I pay that much for that car. So I think there were a lot of economists then that thought, okay, if we, and I agree. I think, a lot could have been done. Not even, just talking about the actual function of the rates, but just in terms of the tone, saying, okay, we're going to raise a 0.25% here, a 0.25% there, whatever. But I think at the time there were a lot of economists that said, okay, say we raise rates right here. What's that really going to do for used car prices? It wasn't like the inflation at the beginning they saw was, 5% inflation across the board. Everything was 5%. It's not like everything was 5% more expensive. It was some things were 40% more expensive, lumber, used cars, and whatnot. And a lot of people were having that debate. How much would raising rates help those specific assets as well as, while still recovering, trying to get back to the.
I think if they did it gradually, it would have been a little softer blow to the markets, though. You know what I'm saying? That's all.
I agree. Yeah, I agree, and that's why I was saying. I think even with the tone of just saying, "Oh yeah, we're gonna do half a percent here, and then another 0.5% in 2 months," kind of that gradual increase would have helped us a lot.
Yeah, I agree. I think their hawkish tone the last 30 plus days, 40 plus days has really cabooshed the market. I mean, look, you talk about used cars. My son has a 2018 Ford Raptor mint condition. He's still mad at me. He wanted to sell it at $72,000, and now he got a $50,000 bid on it. And I said, "You're not selling it now." So he's like, "Yeah, I mean, I sold it and made 20 grand." I'm like, forget it.
Right, and then waited a couple months and bought it back for half the price.
Bought it back would have been about 80, but I told him.
Or bought a different one. Yeah, exactly.
Yeah. I could have sold it for exactly what we bought it for. With 40,000 miles on it. I'm like, just forget it. Next.
I couldn't even find a good used car, so I'm leasing a new one right now. I gotta figure out what I'm gonna do at the end of it, because I got about 1.5 years left on it, so I can either buy it after the fact or just trade it in and be done with it. But
but I think that the market's in a critical point here. Again, I'm getting a little bit of a buy divergence on the weekly charts, so I want to see if we get another push up here. I don't know what's going to cause it though, but I like to see them get above the 30.90 to the 40.90, 40 back up. I mean, just last Friday we were trading 42.17.
Do you? I mean, it seems like usually, or not, maybe not usually, but it seems like a lot of the times you're kind of taking the counter stance of what the market's doing, right? If the market's had a great week, you're like, a lot of times, we're getting short on this, and now the market's been down, you're seeing a buy divergence and think you're going long. What would give you confidence to go long here?
Right now, the S&Ps have to close. They have to stay this week above the 38.81 level.
30.81. Okay.
38.81 on the weekly charts. Any break below that, if they close below that, they'll rally, and then they're going to get crushed.
Okay. So, I mean, I know, so we talked about, might see a bounce here in the next couple days, next week, but then after that, we might come back and retest those lows. So currently right now, are you playing S&P on the long side?
We're just trading them in and out based upon the strategies I have. Yeah. It's just too much volatility to just buy and hold. I mean, we had a great long this morning. We had some really great shorts. I missed I was down around the 01, 02 level, got down to 03, and they ripped to 27. Then I came on. They just dropped from 27 down to like 15. So a lot of movement here. A lot of movement. I mean, they're moving, 8 to 15 in a blink. So you just can't. It's hard to pick a bottom. We just trade what we see based upon the strategies I created.
Got it.
But being that we're deeply oversold, we're about 170 handles from the moving average on the daily charts on my work, plus getting that buy divergence on the weekly. I'm probably in the camp about 65.35 that we're going to hold over that 38.81 and try to get some type of a bounce in the next 1 to 5 days. But not Beautiful, a bounce for a new bull market or anything like that. I'm just saying a bounce to, put them
right.
out.
And we talked about that a lot during, and I'll go back to a daily chart here, as we were kind of coming down here on the SPYs, that, a lot of the times you see the best days, the S&P 500 closing up 3% or 3.5% during bear markets, during when times, the markets are moving down or people have higher short interest.
Yeah, I mean, one thing I've learned in 40 years, I mean, I've seen bull and bear markets 4 or 5 times over, maybe more. Bear market rallies are more vicious than bull market rallies. You get that herd of short covering, man. I'm telling you, there's no offers that are safe. They'll just grab them.
I think this is pretty interesting too. So, let me look. Let me pull this up on my share screen. So this is from the AAII, the American Association of Individual Investors, just their sentiment survey. Basically, they just ask individual investors like me, how do you feel about the market right now? And I'm seeing a huge uptick. I think the biggest I've ever seen in people getting more bearish, right? 42% of individual investors were bearish last week. That's way more than the 27% that were bullish. And now that's gone up to 50.
Yeah, so I think I like to see the number get to like 55, 60 before, and then you'll get a monster rally.
Okay, so 55, 60%, when 55 to 60% of retail investors are bearish, and then about probably 25 will still be, neutral, so it'll leave only about 15% bullish. That's when we want to go long?
Mm-hmm. Something like that.
All right.
Yep.
Let's do that.
Yeah. We're close. We're close.
We're getting close. All right, Steve. Well, I'm going to go ahead and drop that Trade Easy link in the chat so folks can find more from you. Any wise words you want to leave us with?
Just adhere to stops. If you're trading the market, you've seen volatility. I've seen volatility like this, throughout my career. Just preservation of capital. Pick the right names and just trade what you see. That's it.
Beautiful. All right, Steve. Well, enjoy the rest of your Thursday. Any fun Labor Day weekend plans?
Just gonna relax. Just chill out. Hopefully, if the weather's nice, head to the beach one last time. We only have a couple more weeks of summer here, and just try to just ease the brain. That's it.
Beautiful. All right, Steve. Well, enjoy the rest of your day. We'll chat next week.
Thank you.
And folks,
have a great weekend.
You do the same. TradeEasy.com.
Bye-bye, everybody.
All right, y'all. That was Steve Kalayjian from TradeEasy.com. Go check him out. Get some more information from Steve. I like looking at that little sentiment survey. I mean, and historically, right, you're kind of doing well if you're doing the opposite of what a lot of retail is doing. So the fact that a lot of people are bearish right now is making me a little bit more bullish. I'm not going to go out and like do anything crazy right now, but like Steve was saying, you get these violent rallies in bear markets. Are seeing the VIX. What's the one that UVXY? That's the one that. What does David Green says he always does on UVXY? He sells calls against it. I know he says it's always going to zero, so he wants to go short it. Live trading with Steve. I think he does that on if you go visit tradeeasy.com. We do some live trading on this show with David Green. When all of retail is bearish, it's time to get bullish. Yeah, and we're not there yet, but I mean it's getting close, right? It's getting to the point where now a majority of retail investors, you had to go back to April, 59%. That was the most. So here, let's see. I mean, we can look right here. So when was the last time we had higher than 50% bearish? You have to go back to July 6th. All right. So now let's go to the SPY. Or here, we'll do this. SPY price. I'll just do it on Google, so it'll be easy. What was that date again? The last time we were above 50% was July 6th. All right, and we'll go SPY price, 6 months. We'll find that. July 6th, right here. This was the last time retail was 50% bearish. It went up 12% in a month and a week from then. And as it was going up, right, we'll go back. As it was going up, right, July 6th, 52%, then 46, then 42. They start getting less bearish. So I hear Steve saying, hey, I want to get back up to, maybe here, like 58, 59%. But I mean, yeah, historically, we are getting, pretty high, right? I mean, even if you just look at the rolling average over the last, this is since April, so the last 4 months or so, or 5 months or so, we've only been above 50%. 1, 2, 3, 4, 5, 6, 7 times out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. You get the point. It's a classic fade the public, right? What does this mean? Do I need to bonk you? Bonk. The Fed is lost and trapped. I kind of agree. I don't think the Fed knows what to do. That's why, if I'm the Fed and I don't know what to do, I'm gonna err on the side of things of the thing that's like gonna cause people to not lose their job. Yeah, exactly. Everyone bearish. It's like the fade the public, right? If you're like out at a bar or something with your friends, right, and there's 10 guys, and I don't know, maybe you have smarter friends than I do, but I don't know, maybe not. And they're all 10 talking about like, oh yeah, I'm betting on the Colts tonight. The Colts are for sure gonna win tonight. And literally all 10 of them are betting on the Colts. I'm like, there's no way the Colts are gonna win. I'll bet on the other team. It's the same thing with stocks. If I see everybody, talking about that they're short, it's gonna make me want to go long. Aaron, you and Ninja come down to Georgia for a drink? I'd love to. Where in Georgia are you? What's a classic Georgia? Probably some like peach bourbon or something. I don't know what a classic Georgia drink is. Aaron, Brian, bad day, taking cash, taking a walk. That's what you got to do. Sometimes, your trades don't work out for you for a day, and you got that's one of the smartest things you can do. Just say, hey, you know what? Today's not my day. Revenge trading. You'll get it back.
Double down.
Double down, baby.
No, don't do that.
AB takes the over. I do take the over pretty much every game. I'm not gonna not root for points. What do I look like, a nerd?
Yeah.
Luke, just to get you up to speed, I was looking at this from the AAII, the American Association of Individual Investors, sentiment survey. People are getting super bearish out there. Retail is now 50% bearish. You have to go back.
What is this over time?
No, this is just the weekend. Yeah, weekend in.
Okay.
So yeah, these are week over week. So
okay, and you're saying retail. This is retail investors. It's
individual
not like retail
investors.
Shopping. Yep. Okay.
Correct. Individual investors.
Yeah, but the general rule of thumb, dude, is to trade against the retail trend.
That's what I'm saying. That's why I'm bullish right now. Look how few. And look, so the majority of people, 78% of people are either bearish or neutral. Only less than 22% of people are bullish right here.
Yeah. Here's what I was thinking about. Literally, my drive home last night. My drive over to your house actually last night.
Woo! We'll talk about our fantasy football draft.
Yeah. I mean, there's a chance. I mean, this is not a far stretch from reality that big money comes back from Labor Day, right? Everybody's back, everybody's in there, and just starts shorting the hell out of the market. I think that first 7 days, I'm saying give it a full week post Labor Day, is going to be incredibly volatile one way or another. I think that big money is going to come back. They've been talking about strategies over the summer. They're going to actually implement them. Volumes are going to pick up. You're either going to see us go higher or lower. I think it's one of the two.
I would bet higher.
I'm highly convicted.
I would bet higher.
Why?
Because
this week is so brutal.
Partly, yeah, actually, because if you're big money, Why would you want to be coming in and shorting a dull market, a market that's already down 20% when you can go long? And so my thought process here, and I have the daily chart of the S&P 500. I'll zoom in. We were trading at this is a SPY on in the 360s in mid-June. We've had a lot, like some decent news since then, right? On whether it's CPI front, and our energy situation has gotten a little iffy over in Europe, but gas prices have fallen a lot here. I think something would have to fundamentally get worse for these big institutions to want to short the market to get back to these June lows. I'd put more money on that. If there is big money coming into it, they'd be coming in on the long side.
Yeah, I mean, I think that there's a shot at that happening for sure as well.
I mean, think about it too, because think about
just play it tight is what I'll recommend.
Think about over the last few quarters, companies like investment firms and fund managers and wealth managers, they have certain like benchmarks they're trying to meet on their portfolios. They have certain portfolio allocations, right? If they need to be 60% stocks, 40% bonds, and stocks haven't been doing well, maybe they need to buy more stocks to get that back up to the percentage. I don't.
End of year window dressing will be great too.
This year, you think?
Yeah.
Because there'll be a lot of tax
this
loss.
year it'll be especially.
There'll be a lot of tax loss selling, won't there?
Absolutely. I did tax loss selling already intra-year. Let's talk about this for a second. Okay, if you own ETFs or mutual funds, there's a great tax trick for you. What you can do is you can sell your ETF or your mutual fund and then buy something that's substantially similar but a little bit different. That's exactly what I did. So, on this show we talk about individual stocks a lot, but and AB, it doesn't say my name yet on the thing.
Oh no.
But about 75% of my total portfolio is in an ETF portfolio. Right, we can get into the exact breakdown of that ETF portfolio if we want to. It's a lot of U.S. equities. There's some international equities. There's small cap equity exposure, commodity exposure, energy. List could go on and on. But it's into a pretty well diversified and a decently high conviction ETF portfolio. So that's about 70% of the money. What I did this year was I sold a lot of those ETFs that I owned when the market was down, let's call it 24%. I collected the loss on that, right? So I'm taking a combination of short and long-term loss on selling those ETFs. And then I buy an ETF that's substantially similar but a little bit different, right? So as an example, I own ticker SPY, S&P 500 ETF. I still want that exposure to large cap US stocks.
VU.
Yep, and then you swap. I did not swap it into VU.
Oh,
it was
man.
similar. Because I want a different benchmark is why.
VTI? Did you go total
stock
stock
market?
VTI. Okay.
So that way I have a different
then
benchmark.
why?
It's substantially similar, tracks something very similar, and that's not a wash sale.
How is Vanguard able to offer lower expense ratios than other companies?
I think it's a business model decision. I don't think that there's really any magic there.
Like they're just like, hey, we're gonna be the cool guys and
we're gonna be the low cost provider. Yeah, exactly.
I dig it.
They don't like think about that. Look at I hate saying this, but look at CNBC, right? How many ETF commercials do you see all day? Tons, right?
A lot.
A lot. Well, you ever seen a Vanguard ETF commercial?
No.
Yeah, I haven't either.
Dude, I was listening to Bloomberg Radio on my way into work, and they had like.
Wait, you listen to Bloomberg Radio on your way to work?
I was.
Why?
Because it was really early.
You taking a nap?
Huh?
You taking a nap?
What do you mean?
It's so boring.
No, okay. So it was like yesterday. I was up really early, driving in the morning, so like before pre-market prep or anything. I just wanted to get some sort of idea of what was going on in the markets at like 6:30 in the morning. So I was listening to Bloomberg Radio, and
Why were you up so early?
Yesterday morning?
Yeah.
I don't know. I just couldn't. I like woke up randomly and couldn't go back to sleep.
Damn. Okay.
Yeah, I beat Randy. I was the first one here yesterday.
Yeah, you were early.
And today I was late.
Today you were late.
They average out to about like where I should be though.
Yeah, I saw you walk in at like 10 a.m. I'm like, hey.
We had a fantasy draft last night. But anyway, I was listening to Bloomberg, and they had like a whole 10-minute ad read like in the middle of their radio thing for all these different ETF companies or whatever. But one was like a NFT company. But it wasn't just like buy NFTs. It was, I don't know, it was weird. But it just seemed so weird that this company was paying a bunch of money.
Davis is saying that my ETF thing is still a wash sale. It's not a wash sale if you switch the benchmarks. That's the key. You need to switch the benchmarks.
What does that mean?
So SPY, the benchmark, the index that it's tracking is the S&P 500.
Oh.
What I switched it into is another large cap U.S. equity index that it tracks, but it's a different one.
AB got some Spence spirit. Oh,
I don't know who Spence is.
Getting up early. I don't know either.
Yeah.
Literally no clue.
Are you going to his wedding? I can't decide.
I wasn't invited.
Okay.
So.
Okay. Never mind.
I don't think so. I mean, unless you took me as your +1.
That would be more fun.
All right, Luke. So it sounds like, though, if you had to take a choice, if the market makes a directional move coming back from Labor Day, you are more bearish than I am.
Yeah. Yes. I'd say so. I'm sitting on my hands a little bit. I own a lot of stocks right now, but I'm sitting on my hands a little bit.
Here's my thing:
I'm not making a big directional call right now.
Okay.
Other than volatility, how's that?
Okay. Just high volatility. Well, especially with right now, and we're going to see a lot of like low volume today, tomorrow, and then next week pick back up a little bit. But here's my thought process. When was Jackson Hole? Last Friday?
It was last week. Last Friday was the catastrophe day. That was the J-Pow day.
Okay, so this was this day, down 3%.
It was brutal. Dude, when was the last time the SPY was that bad? Are these daily candles?
These are daily candles.
Is this SPY?
Yeah. No, sorry, this is VTI.
Okay, same thing. It doesn't matter.
All right, but yeah, I mean, it looks very similar. All right, down 3.38%. Here's my point. I still, and I've been saying this, right? If you would have asked me, what do you anticipate Jerome Powell saying at Jackson Hole or giving thoughts in the market, saying like, yeah, like it's great to see inflation not rise in July, but that we still got a long way to go, right? Not give any sort of even hint toward pivoting or getting dovish. But for some reason, the market seemed to have expected that and didn't like basically no new news. There was no new news, and I still don't think there has really been. So we've gone from 420 last Friday to 392. I think we'll have to get some sort of like real bad news to come back and test these lows that we saw in June. Things weren't great in June. There were a lot of bad headlines coming out.
Yeah, the one thing that I did like that came out of his speech is that it can't get any worse. Like, I mean, I don't think there's literally anything worse that he could say.
Right.
Do you agree with that?
And I almost think he's doing that intentionally, right? Like, let's get it all like out of the way.
That's sort of what I was thinking.
And like, I almost think they should do that at the next meeting too. Like, screw going 0.5% or 75, go a full percent and then say, hey, we're going to do this now, but then be completely data dependent, like, and kind of just hammer down now and then say, okay, and then we have nowhere to go but up from here.
Yep. Yeah, I mean, it was as bad as it can get. It was the pain comments that got me.
Where he's saying we need to see pain in the labor market?
He said there's going to be pain for businesses and for individuals.
Yeah, and that's what I hate.
That's what I mean. It's as bad as it could be.
That's what I hate is that while inflation is coming down, there's still, going to take the side of we're willing to see layoffs and people losing their jobs as inflation's already coming down. Like, I get taking that mindset if it's actively rising. Well, I guess we need more conviction that it is coming down to a reasonable level first, but it's just, I don't know. We'll see.
We'll see. All right. Do you want to talk individual stocks for a minute?
Yeah, let's do it.
Okay.
Tesla. Let's start with Tesla.
No, what happened with the ATXG yesterday?
I don't even know what that company is.
Will you pull that chart up?
Sure. Give you an hour chart.
Go minutes.
I've got 10 minutes here.
All right. What the hell is this?
Adintech shares are trading lower following the company.
So what did it start at? What did it go to? And what's it at now?
Oh, we should have Matt Hammond on for this yesterday.
Yeah, we should have.
IPO'd at $30, it looks like.
It opened at, okay.
Opened at $30, ran up to a high of $1,147 and is now trading at $75. So, okay, when the stock's up here, when it's at like $1,000, are there people out there that can just sell the stock outright? Or is it like impossible to borrow at that point?
Okay, if you can short it?
Yeah.
No, you cannot short IPOs. There's a shorting rule.
Okay. So how does that work? Like how? So no one made money when this stock went from 1,000 down to 75.
No.
Okay.
No.
A lot of people lost a lot of money.
The people who made money, yeah, nobody made money on the downside swing, but the people who had IPO allocation could have made money.
Yeah, and sold. Yeah.
Right. The insiders probably couldn't. They're probably locked up, but there's probably friends and family who had IPO allocation that made some money off of that.
7 to 1,000. Crazy. That's a crazy move.
Yeah, that's just.
I don't know anything about the company. Don't know anything about the stock. Not gonna trade it. So yeah, I mean, if you want to buy it at $75, if you love the company, go do it. Not investment advice.
Yep. All right. Should we keep going on some of these stocks we talked about recently?
Yeah, it looks like they're having like
All
a
right.
big powwow on CNBC.
Take a look at Facebook if you don't mind.
You mean Meta, sir?
Sorry, Meta. It's a boring one. Give me daily candles. and
Going
zoom
daily.
out 6 months, a year,
daily
something
on
along those
Facebook.
lines.
What was your favorite Facebook game? Did you ever play Farmville?
No, I never really got into the Facebook games.
Oh man,
a little too old for
you
that.
missed out. Middle school, like Farmville. There was a Mafia game on Facebook.
Yeah, see, I missed that one by a couple of years. But check out 155 on that Facebook chart. You probably want to zoom in a little bit.
Yes, sir. 155 is right here.
All right, so here's how I want to call this one out. You have this very, very, very clear support at 155. You got 1, 2, 3, 4, 5, 6 lows in at that level, including very recently, just a handful of days ago. We got another bounce off of that one. The reason why I bring up Facebook is that, again, in my mind, we're going to get some decent volatility after Labor Day when big money comes back and starts throwing dollars around. I really like Facebook. Again, it's trading at less than 4 times price to sales. It's trading at like 13 times forward EV to EBITDA. Stock has gotten absolutely clobbered because revenue did fall, but the company's still putting up $25 billion of a quarter of cash flow. All right, so if you want a defensive stock, you have one that's cheap and super cash producing, and it gives you your tech exposure. That's why I really like Facebook. Believe it or not, Facebook is actually still cheaper than Alibaba, despite all the macro headwinds that are working against Alibaba. And that one's a disaster and a half. We don't even need to talk about that one.
I kind of think we do.
Okay, we can talk about it. So if anybody's been looking for an entry point on Meta, watch out for that 155 level, and then again, absolutely watch out below. That's been the line in the sand.
Here's what I'll say about Meta. I'm gonna buy some Meta here. 162. I think from a chart perspective, like just trying to not even think about it too much, not even look at it too much. I like that it's been consolidating down here, kind of found its bottom, like you said, 155. But here's the thing. I mean, obviously there have been more sellers than buyers in Facebook going back to September 21. But there are buyers down here at 155, at 162. You can see that. If there weren't a lot of buyers, we would have already slipped below here on some of these really bad days. I don't mind getting in down here because it doesn't feel like trying to catch a falling knife down here, Luke, because we've already had this kind of consolidation for now, the better part of like all summer, really.
Yep. I think that's fair. I agree. But again, let's say that we come back Tuesday, Wednesday, and SPY's down 3%. Facebook's going to get clobbered.
Yeah, and it's going to drop below that support.
It's going to drop below that support.
But
that's the
think it
buying
will.
opportunity then, I think. It may not.
Yeah, and then
If you get a bounce off of it, that's your buy. If it falls through, wait till you see 3 green candles, and that's your buy. That's my opinion.
what do you think about this chart?
Which one? What is this?
This is Tesla after the split. We're trading at 268.
No opinion really on Tesla. I've never really traded Tesla until most recently within the past year. I sold puts on the stock and just collected the premium from selling those puts. I think it's from my perspective of somebody who's like more of the fundamental investor, I think that it's a really tough stock to trade one way or another. Like impossible, like off limits.
I agree, actually. I mean, it's going to be very dependent on what the overall market does. If the Fed, Tesla could, but the weird thing is, I mean, we're Tesla's still well off its lows going back to, I mean, again, this is split adjusted. It got down to like 210. We're at 268 now. So if we do end up retesting these lows, the lows in the overall market, I'd anticipate Tesla coming down that much as well.
Yeah. No, I mean, I think that's fair. I want to throw something out to the group. Who is long or in Tesla right now? If you are, drop the 1 in the chat. And then can I throw a new stock at you?
Yeah. Someone's asking about the Tesla chart in the chat, so I'm just going to go full screen on it for a second.
What's the question?
I lost it. I don't see it now. It's weird. What was the next stock you wanted to look at?
Okay, let's talk about these some of these tech stocks on a day like today. So will you pull up the movers widget if you don't mind? We're getting absolutely annihilated in a couple of places right now. All of these tech high flyers are getting killed. Yeah, just throw me your movers widget.
Biggest losers?
Yeah, but nobody can see that.
Oh, wait, hold on.
You
Movers.
can zoom it in. All right, and then give me session and give me 2 billion market cap plus, please.
All right, regular. 2 bill plus. You want losers only?
It doesn't matter. They're all losers. Leave it on both, and you'll see how blood red this is. All right, I'm just going to call out a few names that are really depressed today. So you've got Getty, you have MongoDB, you have GitLab, NVIDIA, which that one is like the one that I want to skip over that list. You have Asana, you have Datadog. There was one more good one, a couple more good ones. You also have HubSpot and DocuSign. Those were the ones I wanted to call out. So these are all decent-sized tech stocks, previous high flyers, gotten killed in the first half of the year, all pretty much the same chart pattern, all down 7+% today. I think a day like today, it's really tempting to try to go out and be a bottom picker on some of these stocks, but they're still all expensive, in my opinion, with the exception of Asana. You know, all of those names that I read out, with the exception of NVIDIA, are all companies whose stories I believe in, who have nice recurring revenue, have sticky revenue, have high customer retention rates, like everything that I think makes for a very fundamentally sound stock. But I think that they're all also very expensive still. Especially, again, when we're coming into this period that's probably going to be a little bit volatile post Labor Day. And when I say expensive, I'm talking about like 10, 12, 14, 16 times price to sales ratio. A lot of these are not profitable, so that's why we're looking at price to sales. The one exception that I'll throw out is Asana. I'm not making a move on this one by any means. I'm still sitting on my hands. But that's the one of the pack where I think that the valuation is getting reasonable, where if you're tempted to do some bottom picking on these tech stocks that are all getting hammered today, that's the one that seems the most fair. If you don't know what Asana is, it's basically like a project management tool for businesses. Let's say you have 10 people who are all working on some part of a business, some part of a company. You need to keep track of timelines, who's assigned to what, who's accountable for doing A, B, C, D, etc. Asana is the place where you keep track of that. A lot of those stocks that I just read off, HubSpot, DocuSign, GitLab, Asana, etc. Benzinga is all customers of, and that's why I think that they're interesting. Bill.com, another one, a company that I love, but I still think the stock is way too expensive. Asana, we have at decent prices, so it's down to 6 times forward price to sales. Still way more expensive than the S&P 500 average, which is somewhere around 3. So you're double. But again, it's a high flyer. It's still decent revenue growth, decent margins, and that's why I think that the company is interesting. I'm not making a move yet, but if you're tempted to bottom pick any of these on a day like today, that's the one that's most interesting to me.
Yeah, and I've liked Asana. We talked it on the show. It came on my radar with how much money the founder and CEO Dustin Moskovitz was putting into it throughout.
Can we talk about your Evan Spiegel article in a second?
Yeah, we can.
Okay.
So we can talk about, but yeah, Dustin Moskovitz was putting a bunch of money in. And so, but Shelly brings up a good point, and this is what I was going to get to with the bear case. So I have the financial statement pulled up, and this all looks great, Luke.
Yeah, I mean, the revenue growth is great, right?
Yeah, annual total revenue, right? Last year, 378 million, way more than the previous year, 227, way more than the previous year, that 142. Double the year that 76, so great revenue growth.
I mean, just quarter over quarter, most recent quarter, because we just we're going to be getting we just got quarterly earnings. They went from 76 million to 120 million year over year, and that proves, I mean, that's pretty much post-COVID to post-COVID more or less, that it's not a COVID play like some people suspected.
Right, but I will say, well, I think that's part of the bear case here would be still that a lot of this growth was pulled forward from COVID, and then also, as Shelly pointed out, Trello. There are a lot of competitors in this space, a lot of other software companies and services that offer a similar service. I think, Luke, you're in a great position as someone who manages people here at Benzinga, and we have Trello, we have Asana, we have Slack, and it's like, you think we do need Asana. We pay for it every month.
Yeah. It's a service we use. All those ones that I write off, again, with the exception of NVIDIA, are all ones that we use.
DocuSign, you said?
MongoDB, GitLab, DocuSign.
What about
HubSpot?
What about GitLab?
Interesting, but just like the rest of them. My favorite of the whole group is Bill.com. Bill.com of all those is my favorite. From let me say this, from a company story perspective. But I think that the stock is still really expensive. I believe it's trading at 23 times price to sales right now. I mean, that's crazy, right?
Mm-hmm.
That's expensive, man. Revenue growth has been great. Right, we want to look at year over year, went from 78 million to 200 million of quarterly revenue. That's pretty damn impressive. But 23 times in a volatile / bear market is tough to pay up for, man. Yeah. I rode that stock on the way up for a while.
Dude, look at Asana's fucking chart. This thing was 140. I mean, think about Asana being $142 a share in November. We really got.
So I'm saying it's a little bit expensive right now.
And it was
but not crazy. I think it's reasonable at 6 times price to sales.
Right.
And it's how much right now?
It's $17 a share.
And it got up to, so it's 10x that, so it's trading at 35 times price to sales.
But with lower earnings.
With lower earnings, it's trading at 55 times price to sales. That's what I'm saying, dude. Look at Bill.com.
But why were we not like, all right, this is the most obvious like tech bubble, like SaaS company bubble ever?
Yeah.
Bill.com, yeah, same thing. Got up to a $350 stock, same time, November 11. I think that's what's really interesting to me is when you look at the S&P 500, I think technically the peak is like January, but all these SaaS plays peaked out in November, and same with Bitcoin.
That's when Bitcoin peaked out.
Yeah, a lot of Bitcoin, a lot of the crypto plays. So I think a lot of the high growth and like ARK peaked out in November, and then we got, some bounce and other things on the SPY. I'll pull up the SPY just to show what I'm talking about. So here's November is when we saw the height of Asana, Bill.com, all these things. Here's the pullback. SPY came back and made new highs. All those high growth names never did. So that should have been a sign then for anyone trading those that, hey, these things are showing relative weakness. The overall market's not digging them as much as when we were, making new highs with these names every single day.
All right, so now can we have fun for like 2 minutes? I know that you have another guest. I
yes.
need to get off here. Wait, what was your Evan Spiegel thing? I saw the title, I clicked on the story, and then I fell asleep before I read it. So the news on Snapple, you're loading that up. They announced the workforce reduction.
So Snap reportedly plans to lay off 20% of its workforce just weeks after CEO closed deal for $120 million mansion. So
he bought a mansion for, is that what it means?
Yeah, he bought a house for $120 million. Can
you pull it up? Yeah, okay, so I did read the article. I didn't look up the pictures.
So we don't, so here, we...
No, it's got a name of it. You have a name in your article, I thought.
What do you mean?
Doesn't the mansion have a name? You know that if your house has a name, it's a hell of a house.
No, I don't think so.
Like the blank estate.
No, I got here's a New York Post article. They used a picture from Google Earth of, I think it's just this compound that's like still being built. Yeah, construction on the 2 parcels is expected to take a few more years before it's fully completed. I mean, but look how big this is. This is in Los Angeles too. Look, this looks like a business over here on the right. I guess they're gonna, is that the house they're building? I don't even know.
Wait, so it's not built yet?
No. But that'll be a good article. Like, check out this $120 million mansion once it is built. But yeah, only 2 other houses in history in California have been sold for more. Jeff Bezos' $165 million Beverly Hills home, and then Andreessen Horowitz co-founder Mark Andreessen's $177 million. What did Mark Andreessen first? Did he get really rich off Uber?
I don't know. I don't know what the first big investment was, to tell you the truth. We should. There was obviously Netscape, but what was the first big investment?
Oh, no. So he was way earlier than Uber. Who was the one that made a bunch of money on Uber? I'm thinking of Jason Calacanis.
Yeah, I don't know.
Let's see. Mark Andreessen career. Oh yeah, no, I think it is. I think he did make most of his money with Netscape, or at least like to start out with. Oh, his first. Okay, so in between 2005 and 2009, when they started Andreessen Horowitz, him and his brother Ben, they invested in Twitter. So I'm sure they made some decent money on Twitter with investing in that before it went.
I'm looking at this Bezos $165 million house. It sucks.
It sucks.
Yeah, look it up. It's shitty. 165 million. Come on, man.
Bezos 165 million house.
All right, and then I'll leave everybody.
Yeah, then we got Rob Roy coming up.
Oh, that's a good one. Look at these pictures. Boring. Nothing cool.
Wait, is this what I'm only seeing another Google image? Insider sucks.
Who built the house? That's a good question.
Like which company?
Like what dude? Built the house in a long time ago, 1935.
Wait, here. Beverly Hills. I mean, dude, yeah, if you have a mansion, like, think about how big of a compound you could build somewhere like other than LA or Beverly Hills with all this money.
Shit's not impressing me.
Like, go up north in Michigan and just buy a whole fucking city.
I was looking at that. Like in rural Michigan, there's a 5,000 square foot all wood like cabin style home, 5,000 square feet big. It was like 210 grand or something.
Yeah. Because
like,
think about
it's
it.
like holy shit.
Think about it this way. Okay, so Bezos bought
The issue is it's a 6-hour drive. I get there once a year.
So Bezos bought a $165 million house in Beverly Hills. Maybe it's some sort of investment. Maybe he thinks this is going to appreciate in value over time. But why wouldn't you get like the nicest, penthouse or condo or like whatever you want in LA and then spend that money on like you could buy like what we're saying, like somewhere in Michigan, somewhere else.
Yeah, for somebody like him, it's not mutually exclusive. I'm sure he's already got all that other shit.
For Bezos, yeah. He couldn't spend all his money if he tried. It's not an issue for him. All right, Luke. Well, any wise words you want to leave us with before you part?
Have an awesome 4th of July, everybody.
Nope.
Fuck. That was not intentional. Sorry.
We've had a long week here, Benzinga.
Yeah.
We had a
really
draft.
big end of month push. Check out Benzinga Pro, and then whatever the 3-day weekend is.
Pro.benzinga.com.
I'll be grinding it out
chat.
this weekend. We have a really big event in September 13th in Chicago that we've been working till 3 a.m. on every day for 2 weeks. I'm dead.
Luke, I'm about to go get my haircut in Dearborn with Lebos's guy. What should I get? Should I get like a fade?
I reverse mohawk, I think.
Reverse. So wait, leave on the sides and then get the middle cut?
Yeah, exactly. There you go.
All right. I don't know if I'm going to do that, but... All right, guys. Smash the like for Luke. Let's go ahead and get Mr. Rob Roy on the... Shelly wants me to shave it all. Def a fade with a design. Yeah, I'm thinking either like a little lightning bolt. I saw Adam Wainwright got one of those the other night, and it looks pretty cool. So here's the thing if you're out from outside Detroit, Dearborn, neighborhood near Detroit, mostly Middle Eastern people, and so my buddy Lebos is I don't even know what Lebos is, but he's some sort of Middle Eastern like half or whatever. So he goes and gets these like serious fades, and I'm gonna go, and I've never gotten a haircut like that. So I'm excited. I might just be like, go, I'm not going to come in here and get a new style haircut and not go full Monty, go full blow on it. So I think I'm going to do it. I don't know. What's the fuckboy TikTok haircut? I don't think my hair's long enough for that. Are you talking about like I don't know. We'll see. All right. I don't think Mr. Roy wants to hear me talk about how I'm going to get my haircut any longer. So let's go ahead and get him on the stream, see what stocks, what trades Mr. Roy has been watching. Without further ado, let's give him our special introduction and bring him on. Mr. Roy, how you doing today?
Aaron, how are you?
I'm good, man. It's Thursday, almost Friday of a long weekend. Excited for Labor Day weekend.
I get it.
How are you?
We are too. We're doing great. Looking forward to that long weekend. We got plans for every day. We may fight rain a little bit on one of them, but we're going to be out and about the entire time. So looking forward to it.
Hell yeah. So you say you're out tomorrow?
No. The whole weekend, Saturday, Sunday, Monday, we've got plans all 3 days. So we'll be running around all 3 of them. So tomorrow I'm in the morning. I'll be working, and then after that I'm done. Trade in the morning, and I'm done usually on Friday in the afternoon.
Got it. Cool, man. Yeah. So how's your week been? I mean, the market hasn't been good this week. Obviously, I saw the NASDAQ gearing up to close 5 days in a red in a row for the first time since February.
Right.
I mean, what have you been? You've been short all week. What have you been doing?
Well, with options, the equivalent of short is buying put options, right? So we've had a lot of puts that we've dealt with. I mean, I had, goodness gracious, we had puts on SPY today. We had puts on Qs. We did a covered call on Amazon that we already bought back for a nickel. We got 35 cents for it for this week. We had an Apple bear call spread, an Amazon bear call spread. NVIDIA, I missed the spread on it, jumped in on a put, and we picked up about $4 on that. So overall, it was a good day today, but it's all been put options.
So I mean, and right now, obviously, the market there's a trend, right? And the trend has been bearish for the past, I don't know, week, 2 weeks or so. And it's that old saying, don't fight the Fed. But at what point do you start getting interested on the long side?
So, it's funny. We just shot a video about this a little while ago before we got started here today. And if you're looking at the chart here, Aaron, the thing for me is this. It all comes down to the technicals. I'm not a guesser. I'm not jumping in ahead of the game. We had this breakout here and failed immediately, harshly right after it, day after, and this big pullback. So I want to get above that 41.81. It's a very simple process, folks. If you don't know that number, write it down. 41.81 is a major fib level. I want to see stock price come above the 41.81, get above the 4,200, not by much, just move up above it, pull back, ideally towards that 41.81, doesn't have to hit it, and bounce. And that is my long, my place for going long is right there.
Yeah. Okay. So you want to see it, get above some of those moving averages, really see the price action. I mean, we never. Okay, so this is going back. So we did get above that 42 level a couple weeks ago.
We got right above it here, and we failed. I bought in here. I bought some in here. We pulled back. We got this gap down. I got stopped out of some of my positions. That gap hurt for most people, and it gapped right down to that 41.81 level, this black line. Critical level. But I am long. I mean, like I told you, Amazon, we've got 80% of what we looking at a full investment. We've got 80% of it. We're waiting for another bounce for the last 20. We're waiting for Google and Tesla for the entries on those as well.
To go long on them?
To go long on them, yeah.
Okay, I like that. So yeah, I mean, I know you're looking more so at the technicals, but from I was talking to our last guest about this as well. I've been checking out this. I'll share my screen real quick. This sentiment survey from the Individual Investors Association. People are getting. You can see just from last week, about 42% of individual investors were bearish to this week, 50%. People are getting a lot more bearish. Do you look at any of this stuff? Do you care, or are you just looking at the charts?
I don't, because I think some of that is skewed in the way that there's a lot of new blood in the market right now that hasn't been there before ever in the last couple of years since COVID, right? And I don't know if an overall sentiment of individuals really matters. I mean, the sentiment to me comes down to one thing, Aaron, and it's the S&P 500. If we look, right, there's a key level, right? We're looking at that 20% correction right down here. Right, that is a little small for me without glasses. 38.55-ish is about a 20% correction. That puts us at the 38.64 level of where my current fib is. That right there. I think we break that level, and there's going to be tremendous amount of fear increase by the break of that 20% again. We haven't been there in a while. We tested it back here in May, early June. We broke hard in June, and we haven't been back since this bounce that took place here the beginning of July. Excuse me. So if we pull back into it again now, there's a lot of concern about more of a bearish sentiment kicking in. This is my sentiment indicator right here. What's the chart telling me?
Yeah, and I mean, I think that's where there's a woman on Twitter I love, Elaine Meisler. She's great with charts and whatnot. Her pinned tweet is that nothing like change in price to change sentiment, right? People, the individual investor survey that I show you is really just going to track what the market's doing, right? As the market's dropping, people are going to get more bearish. As the market comes up, people are going to get more bullish. So does it matter looking at the sentiment? Not really. You might as well just look at the market.
That's my opinion, 100%, Aaron. I agree with you. Spot on. That's exactly it. I don't care about the other stuff.
Yeah, so whether you want to look at it, the time to buy is when people are really bearish, or just, the time to buy is when the market's down 20%, it's effectively the same thing.
And listen, sooner or later, you're going to be right? Right. If you decide to buy because it's down this time and the market takes off, you look like a hero. Right.
Or if it goes down another 10%, but you hold and then it's up 30% the next year, you're like, see, I was right.
And for me, long-term positions, Amazon, Google, Tesla, long-term, I'm not as worried about being in that position. We get a pullback. It's not a trade. It's an investment. The good thing is I can rent it out along the way and bring in cash flow each and every week, actually, not even month, each and every week.
Yeah, so let's talk about that. So let's try to make it as simple as possible for someone like myself who really hasn't done that, right? Gone long on a name for a long-term investment, and then also tried to trade some options, maybe sell some puts or whatever against it to raise some cash. So say I'm looking at Google right now, $108 a share about. I'm thinking, all right, Google's down 27% still from its highs. I want to go long Google. How can I make some extra cash trading options on it?
Right. So first thing, we look at the daily chart, right? We look at the end of day chart is the very first thing we do. Google is in an overall bearish bias, true bear by the direction or location of all the moving averages, the 3 moving averages there. And if you own the stock thinking, all right, I'm going to dip in it here, and it made it down to the 104, and if it gets down there again, I'm going to buy some more, and that's your plan, right? Not a bad plan on a company like a Google who did a split, and we're expecting some great things from them in the future. Listen, you own the top 2 search engines in the world. You're going to take off at some point with the market, right? So I'm looking at this saying, okay, we're at 107.67 right now. If I go and look at an option chain, and I go to Google, and that's the one I trade the L. I don't trade Goog. I trade the L. So as we're looking at the option here, we're looking at calls, right? I would be looking at this week's options, Aaron, first to see what's going on there, right? If I look, I want to find a 40 delta. So that puts us at 109. So if you believe Google is going to stay below 109 by tomorrow's close, someone will pay you 57 cents for that right to take the stock away from you at 109. And that means they could take it away anytime between now and tomorrow, 4 p.m. Eastern time. If it closes even 1 penny below, you keep the stock and you keep the 57 cents. Closes 1 penny above, they're going to take the stock away from you at $109 a share. You bought it at 107 3/4. So you made $1.25 on the stock plus 57 cents on the option. Call it 50 cents. So you made 2 1/4 on that trade by tomorrow if they take it away.
Got it. Yeah, and I mean, I think just the idea of kind of selling options or trading options in general scares a lot of individual investors when, the way that especially you talk about doing it, Rob, is usually pretty, I don't want to say, nothing I guess is necessarily like 100% safe, but it's pretty conservative, I guess you could say.
It is conservative, yes, if you have a good understanding of the system, right? It is strategic in the way that we do it. We don't go at it half-heartedly. We don't just say, let's throw some money into this, right? Or I'll give it a shot and see how it goes. Oh, it's not that much if I'm wrong. I don't do that. I've worked way too hard, grew up poor. I didn't have a silver spoon in my mouth. Mine was plastic and it was broke, okay? I don't just waste money for the sake of. I'm not taking the trade unless I think there's a good opportunity I'm going to be profitable in that trade. This is a way of renting out your positions. I wish I would have done these types of trades, Aaron, more of them when I first started. I'd have another 0 in my account today had I done that. It's nice to get the $10,000 win on a trade, but man, if you could just bring in 2, 3, 4, 5% a month, 3% a month, in 2 years, you double your account. At the rule of 72, in 2 years, you could double your account at 3% a month. It's not that hard.
Yeah. No, and I want to, and honestly, I'm trying to, I gotta get you to help me get set up on doing some of this with some of my long-term names, because it would be nice to raise some extra cash while trading some of these. Sarah Jean Baptist in the chat, I think from Iowa City, is asking about Lulu. What do you think about Lulu?
Let's take a look. I mean, listen, the kids still like it, right? So how bad can it be?
Exactly. You're a smart guy, Rob.
I
like how you so one thing that I would say I don't love about some technical traders out there is I think they overcomplicate things too much. You like to keep things pretty simple, which I appreciate.
Listen, I was a C student in high school. I did not have these massive grades. I'm not this brainiac. I don't have a college degree. I dropped out of college. I took calculus and chem the same semester at night. That was the end of the college career. 4 days into it, I was done. So yeah, we definitely try to keep it simple. As far as bias goes, we're in a bearish bias. It's not true bear, but bear enough to take a directional trade. 281.5 is our first support level in there. Until we get back above that 312 level, I'm very leery about doing anything. And until we break the 281, I'm leery. I mean, we're in the middle of nowhere. This is a guessing game, right? You are on a road that you can't see where the edges are, and it's too dark at night, and there's no lines, and that's what you're driving on right now. Until you can
and the company reports tonight. Just by the way, I didn't know that.
Oh yeah, actually, I got an E down here. I didn't catch it, but good point. Yeah, so that would be taboo for me right away. I'm not touching it. Day trade, yes, without a doubt. Would I day trade this? I'll look at pivot points. I'll look at intraday technicals. I use my look left theorem, and would I trade it intraday? Without a doubt. Something to hold overnight, not until we get back above those moving averages. Just like we would want to do on the S&P, I need to do the same thing here.
Yeah, and I mean, and I will say for Sarah Jean or anyone else wondering about this, we're talking about it from a trading perspective. If you love the name long term and want to hold it for 10 years, it's not really going to matter in the long run that much if it goes from 288 to 281 and hits these pivot points. So if you love it, and then this isn't investment advice, but you can go out and buy a few shares of it and then let it sit in your portfolio. And maybe if you had some money set aside, maybe don't put all of it in it today and maybe put a little bit of it in. And if it goes down lower, you can buy some more. But trading wise, listen to Rob, right? You're in the middle of nowhere and you got earnings tonight. So I'd wait.
And to take it one step further, as an investor, why just sit on it? Everybody understands real estate, right? You buy a house, you don't hold it to it appreciates 10 years from now, and then you rent it out. You rent it out now, get the cash flow. Let's rent out our stock. Let's go find a 40 delta, right? I could rent out, I could sell. Now this is skewed because of earnings for sure, but I could sell the 295 calls for tomorrow for $6.50. Someone's willing to pay me $6.50 to take the stock away from me at 295 while it's trading at 288.5.
Yeah.
Let's say they don't take it away.
But your downside there is if the stock rips after hours, right? If it goes up above that.
Correct. But if you're going to hold it anyway because of long-term as an investor, you're not looking at earnings. You're holding it, period. You may buy a protective put for the downside insurance. But let's say that that this stock did go down. You bought it at, let's just call it 289, we'll say. And let's say you got $7 for it. That kind of evens it out, right? So 289 minus 7 is 282. Your risk is the stock going below 282.
Got it.
And look, 281.55 is support. You guys see where Fibonacci's come in? I mean, look, it's not like I didn't bring this symbol up. You guys did. We're going right to that fib level. That blue line right there is where the support is. That's where our risk is as well. Is right.
Yeah. Someone in a discussion in the chat. So Sarah Jean did say she is in it for the options. So I always just like to clarify because sometimes people are asking about a name for different timelines, right? For a long-term investment, for a trade. Options, again, going to be highly volatile. They're going to be expensive today with the VIX up, with earnings tonight. So just keep note of that. I don't think either Rob or I have any conviction on which way Lulu is going to go, higher or lower after hours. I like the name. I do like the name. Someone else in the chat's asking, is in 10 years Lulu still going to be the ish? I don't think it necessarily, I do think with like clothing brands and stuff like that, you get these fads and whatnot. But Lulu has already been around for a while and seems like even if, the fad stage has kind of passed. It's successful enough that people still go there and shop. And I would point to something like Crocs, where Crocs certainly was a huge fad in like the mid 2000s and is now not. But the company is still okay, because then instead of becoming this like growthy fad company, it's like, oh, we just make a lot of money every quarter. We sell a lot of shoes. So just because Lulu, even if Lulu isn't still the hottest thing, the fad, whatever, they might still be successful. So I'll just throw that out there.
True. And they may not, depending on what they do, if they do a bunch of splits and have a very large float at some point, you're not going to see the massive growth in share price. That doesn't mean that there's not maybe a dividend paid and or the ability to rent the stock out like this. I mean, look, for next week, Aaron, the same thing. I could sell the 300s for next week for $7.25 right now.
Got it.
I mean, you got a lot of cash flow on this position.
Yeah, I really like this name. Again, I do own some Lulu in here, but cautious again with earnings today. Rob, we've only got about a couple minutes left, so I want to turn the floor back over to you if there's anything else you'd like to talk about, or any tickers, any charts.
Yeah, so I've got a couple of them for us today, more than we're going to be able to get through, but let's go ahead and start off with Goldman Sachs. Goldman Sachs is that switchback trade that I talked about a couple of times here now. Guys, we're sitting right at this major fib level. If we break, retest, and drop, there's an entry opportunity. This is for tomorrow. If we bounce, retest, and take off, there's an entry opportunity. So this trade gives you the ability to go both directions and know that if you're wrong, you've got a minimal risk in that trade because you're at a key level. And we have a confluence with that 55 right there. So check Goldman Sachs out. It's huge, right?
Yeah.
Qs, Aaron, I know how much you like them.
I love them.
I know. Look where we are, at a major fib level. There's nothing. Listen, I'm not a brainiac where each one of these have to have a slight nuance to it. I like repetition. Do it again and again. Break, retest, fail. Take the bearish entry, buy a put. Bounce, retest, and take off, buy a call option on the same position. But no matter what the market does tomorrow, you've got a potential trade set up now for tomorrow. Right?
Yeah.
Sorry.
No, go ahead. No, go ahead. Pull up what the last one. We got like 2 minutes left. But yeah, I like so looking at the cues on that fib level. Have we bounced or not? We broke
through it. We broke through it today.
That's bearish, right?
Well, yeah, it's still, we needed to close there. We're not there yet. We want to close, and we'll make the decision on the closing price. I'm setting you guys up for trades for tomorrow. These are ones that you have an opportunity to take for tomorrow.
Got it.
Square.
Square.
Massive intraday movement. They're sitting at a key level. It's the exact same trade setup. The same exact trade setup. And listen, if you want to know how to trade them, guys, there's a training that we did. Aaron's going to drop a link in a little while, but there's a training that we did called tradinglikeaboss.com is the website. But if you go down to the bottom of the page, how to trade news candidates, that's a free resource on how to trade just what I'm showing you right here. How to trade these types of candidates. Right?
Yep, and I do got that link in the chat, tradinglikeaboss.com. So go ahead and visit that, get some more info from Rob. If you want to learn how to trade options like Rob does, make a little extra cash throughout your week, whether it's because you're saving up for a new house or you just want some extra income, Rob is your guy.
Appreciate that.
Always, man. Well, enjoy your long weekend plan. Sounds like you've got a busy weekend. So make sure to, unwind, chillax, have a good weekend, and then we'll get back to it next week.
You as well. Say hey to Luke. I haven't seen him in a bit. It was good to see him back on.
Yeah, he was just on before you hopped on. Maybe next week I'll get him to hang out for a few minutes when you come on.
That'd be awesome.
All right, we'll do it.
All right. Take care, guys. Good luck, everybody. Have a good weekend.
Appreciate it, Rob. All right, y'all. That was Rob Roy, tradinglikeaboss.com. That link is in the chat. Make sure you go check that out to get some more great info from Rob. All right, guys. 1 o'clock. Loved hanging out with y'all today. Have a great night. We'll be back tomorrow. Sharp, 11:30 a.m. Eastern. No one be late. Everyone better be there on time, ready to go. Smash the like one last time. Subscribe to the channel if you have not already. Peace and love, y'all.